Do you want to learn Elliott Wave Theory? Well, if so, consider joining the Green Star Trading Patreon at Tier 2 or Tier 3. You will unlock this playlist, 14 video part series teaching you Elliott Wave Theory from scratch in a simple and easy to follow manner. You'll also get access to other playlists such as the My Chart series showing you how to set up my chart the same way I do, with the same indicators and tools configured the way I use them. Also, I've now got a second series of this which will cover all of the classical analysis techniques I use. We've started with episode 1, part 1 and part 2, support and resistance, but we'll be covering volume profiling, candlestick patterns, indicators, all sorts of things to come over the following months. I also have my deep dive videos as well, which I'm now currently doing a second part of a new one which will be uploaded to here soon. And yeah, I also have a trading playlist showing you how to use the standard trade setup, the STS, and a little bit on psychology and risk management as well. You can unlock all of these things by becoming a patron today at either Tier 2 or Tier 3. There are some other benefits to joining Tier 3, or you can just support the channel at Tier 1 for a £5 a month. Either way, I'm not going to read it all out to you. Follow the link in the description box below of the video you're watching now. Come over, have a read for yourself, and if you want to sign up, please feel free to do so. I would always recommend signing up at the start of the month so you get a full month's value for your subscription before Patreon charges you again. Alright guys, let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Alright, welcome to our update for Bitcoin this week, and a little delayed getting this out, but better late than ever. The summer holidays have started now, so both my kids are at home, and I'm just not going to be as available as I have been, as I am during the rest of the year, so you can be expecting less output on YouTube. So, apologies, but I deserve a break over the summer just like everybody else. So, let's get on with an update here. We're going to start on the weekly time frame on the BLX, then we're going to come down and look at the smaller term Elliott Wave count for both alternate and primary, and discuss various other ideas as well. So, starting here on the week. Right. Cards on the table. We don't know what this is. Right. We have a bearish count, we have an alternate count, a bullish count for it. It's ugly, it's difficult to decipher on the small time frame, so let's just be absolutely honest and say we don't really know what that is. Okay, now what it could be is it could be 1 and 2 with 3 and 4 and 5 to come, okay, of a first wave up. Now if that is the case and we get 5 waves up, we're going to be looking for 3 waves back. Could come as a zigzag like that, or it could come as a flat. Either way, weekly time frame, long-term trade entry here, big ass swing trade if you're bullish like I am, to potentially the moon if this is a 1 into a 2 and we're going into a 3. This is what I'm waiting for to really commit to this thing. Okay, now at the moment it's just too uncertain for me. I'm not confident, so I'm looking at what can happen if we go lower. Although this is the primary count, we're saying for the moment we've bottomed. We're not saying it with any really strong conviction. We're keeping an open mind. So let's say we come lower. We're in this demand zone here, which is signified by this little bump in the volume profile of this prior impulse. We can also see it around here, and it is essentially represented by price having come to a level, backed away from that level, found buyers and continued to a new high, right? Supported by some actual trading rather than just literally there being nothing in some of these moves up. So we've got a little bit of demand, and that's what we've come back to find support. And we're in a support region here around the 19,764.51, and we've also got another support level below that at 17,207.96, which is pretty much where we put in the local bottom. If we fall further from here, then we've got the 14k region, which is essentially it's 13,831.41, which is this prior high here. Okay, and then after that we really fall into some seriously heavy trading down here, some heavy demand as I call it, where we've had a move up to a level and back and found buyers. We had a move prior to that, move up and back and found buyers, and then we've had a larger wave degree move up and move back to find buyers. So there's been buyers in this region multiple times before. Okay, a lot of trading going back and forth in here, strong demand down here we can see. Represented on the volume profile here as well quite clearly, and some strong support levels here with previous highs becoming support, resistance becoming support, becoming resistance, becoming resistance, becoming resistance again, and then being back tested for support. So this 10 grand level is extremely strong. support. If we come down much lower, I'd expect that to hold. And with my bullish bias, and being absolutely honest, it is a bullish bias, if I see that down here, price come down low, that's where I'd expect it to stop. I'd expect us to find a bid down here, and what an opportunity if we do come down that low, because we'd be looking for the same thing once again on a longer time frame, whether it came here at 5 up or whether it comes off of the 10 grand, you know, 5 back, 5 up and 3 back, an impulse wave up, could be a diagonal, a motive wave up and a 3-wave corrective move back, anywhere between the 38.2 and the 78.6% retracement to set up an STS off a standard trade set up on a smaller time frame, which would be another 5 move, a 3-wave move back. We define that as the reaction to the initial bounce. So if we see that, that's it, big time styly, throw our weight behind that, because if it's 1 and 2 if it's 1 and 2, you're off to the moon at that point. So just, you know, that's how I see things if things continue to come lower. So how do things look overall? Well, we have pierced the 250-day exponential moving average, as we can see here, and are currently trading below it. Right, this is on the weekly time frame, 250 on the weekly exponential moving average. We pierced it here as well, and we bodied below it for a while back here. That's what we're doing currently. Now, we do look more bearish from that perspective than we have in the past. Okay, we've come to it here as well back in the 2014 bear market, excuse me. So we are looking really quite bearish in terms of just how much of a hammering price has taken. And if we look at the RSI I've pointed out here, let's just have a look at this RSI. We can see how the previous market bottoms have come in extremely oversold conditions on the weekly time frame. So we had a reading of around 21.74, and then we got around 21.61, and then we got the lowest reading we've had at 19.35, which is the most oversold we've been. From that region, we've had a bounce over the last few weeks, and we pushed ourselves just back into neutral territory. Okay, above the 30 on the RSI. Now we've seen signs of capitulation with the volume spike here, but it looks more familiar to me to the 2018 capitulation. So we had this volume spike here as those who were going to sell finally sold after this long period of consolidation, right? But that wasn't the low. We made a low a little bit beyond it on declining volume. Now, from the volume profile that we're looking at here, that looks more familiar. Peak in volume and then some lower volume afterwards, perhaps going to make one more final low on declining volume. Whereas the turnaround in 2020 was immediate. We have a capitulation move here on the volume, big sell-off, and it's immediately followed by very strong bullish move back up with strong volume to support it. Not stronger than the volume that brought it down in the week prior. That would have been ideal, but we very, very rarely ever see that in the crypto market at the lows. You just don't get that kind of reversal because the range in price that we cover during these sell-offs is so huge, right, that you just don't tend to make up the difference, if you see what I mean. Whereas if it was a few dollars difference between when the selling really got underway and when the buyers came back in, you could probably see buy volume be supported beyond the sell volume, but we just don't tend to see that at the lows here very often on the weekly time frame. Yeah, we can see how all of the move up in the wave one was on declining volume. Same here. It's just because this price skew is so extreme. You know, you could buy a lot more Bitcoin at $4,000 than you can at $70,000, can't you? So that's just common sense. Anyway, I feel I'm waffling a little bit here, but that's what I'm looking for if we come down lower. Right, so now let's just have a look at an alternate count. We've got a really old count. This goes back to October, November 2021. We were working with this. This goes back to when we had a triangle as an option and we had this combo or a flat as an option. Right? And this is the idea that we're actually in a wave one. Let's just remove some of this info off the chart here for you so you can see a bit clearer. So we had a wave one and a wave two, a wave three, and down to a wave four. Taking the two and the four here, assuming the four's in, right? Projecting Elliott's second method from the two and the four to find the five. Now, what we do here is we would take the channel, we would drag it up to the top of the three, right? and that would give us our projection. But what I notice here is if we take the high of the 1 and the B wave high, or X wave high in this case, and then the low of the 4, we actually get this little throw over in the 3 of the channel, which is quite common. Okay, so this is still valid until we get to 13.831.41, which is the top of the wave 1 back here. If we come back that, this cannot be a waveform. We can dismiss this count completely. So we're still currently legal, and we're still currently hanging on at the moment, so we can't dismiss this completely. And then we've got our first alternate really, which is the idea of going lower, but we haven't bottomed. It's still the same count, 1 into 2. I struggle to see it any other way with the way we come off of the high, bar that alternate we just discussed. So I see this as W, X and an extended Y, and we've still got the A, B, and we've got the C leg to come, and I have the target 1-to-1 extension of the recent ABC, the zigzag within the Y wave of the Y, looking for around 12,000. Okay, around about $12,000, which brings us straight back into price support level, that 11,902, straight back into where the heavy demand area begins here. We've got all these highs and all this support to be prior resistance to become support down here, and that would be 1-to-1 in this final move if we come lower. Alright then, so I think that really basically covers the long term here. We've looked at our moving averages as well. I've also started including a longer term moving average, which we can only see on the daytime frame, which is the 1460. Now the reason I use this, or I've started using this, I may have mentioned it in the previous episode, is because this represents 4 years. 1460 trading days is 4 years. So we often hear about 4-year cycles and stuff, so I figured we might as well start including a 1460 moving average. Now it's an SMA, not an EMA, but it has definitely been played with before. We can see how a spike and then strong support at the body of those candles there. We can see how the lows around the 2018 lows were very close to it. The 2020 low pierced it, and then we have recently come back and traded down through it, and now have stepped up above it and back tested it. So if we just zoom in a wee bit, this 1460 moving average. Now if you like the look of how it's interacted with price on my chart, feel free to include it in your own analysis. I've only recently added it myself, but I'm liking how it's working so far. Move up, back test it, resistance, resistance becoming support. That's what we'd be looking for in the local price action. So it looks like, yes, we could have bottomed. I still think that's possibly the case. It's still my primary, but my conviction isn't particularly high, and that's the best I can really give you at the moment in terms of confidence for the longer term count. Okay, so now let's come over to the smaller time frame and head over to our other chart here. So here we are at the lows, current lows on the 1 hour time frame. Let's just bring up, before we get into the Elliott wave count, let's just bring up what we're dealing with here. So we can see that prior resistance around this point of control, and this is the volume profile for this move down, what looks like a 5-wave move down. So for this impulse coming back into the prior trading, we see that we came to resistance, tested it again, came through, back tested it, moved up to a new level, and are testing it again for support. 21,707.28 roughly I make it, and we're kind of just in a holding pattern at the moment. Right, the prior peak we've made was at the last part here of any volume, and there was a tiny bit of supply in here, but that was it. So we're not really got anything ahead of us now. If we do come out of here, we should be on our way back to this prior resistance level here, around 28,607 into this, all of this supply, which we can see in this prior impulse down. So we're still waiting to see what we get out of here. If we get 1 and 2, and this is 1 and 2, 3 and 4 and 5, 3, 4 and 5. If we do something like that on the larger time frame, and then come back in 3, that's going to look very convincing to me. I'm going to be very up for that. Now at the moment it could still be corrective, so that's kind of what we're looking at on the shorter term. Now let's come in now then to the actual low itself and try and talk our way through what we've got here, and it's not pretty. Okay, it's just not. So let's go with the support for the primary count at the moment. Right, with the idea that it's a bullish low. Now I've had to bully this quite severely. I can get an impulse off of the low. I can do that into 1. From here I've had to go A, B, C, flat with an expanding ending diagonal which finishes in a truncation just to get a larger A wave. Right. From there I've got a zigzag for the B, and then I've got 5 waves down in a C of a flat, a running flat. Okay, so we finish higher than the A wave, the C wave does. Here's the C, here's the A. Now it's only marginal, but it's a running flat, but it's ugly. Now I have seen people try to go 1, 2, 1, 2, but I have to be honest, I cannot for the life of me get an impulse out of this. Just can't do it. Okay, if that's a 1 and that's a 2, where's 3, 4 and 5? And it doesn't count as a diagonal either by my mind. So the best way I can get through this is to get the low to here. Right, so a big ass 2. Right, as a running flat with some really ugly subdivision going on. From there it doesn't get much prettier, so we're leaning into a members count here to help us get off of the low. So thank you for your contribution, you know who you are. I was struggling like crazy with this in the live stream the other day, and the best we've been able to do is 1, 2, diagonal 1, flat 2, 1 at the subwave degree of submicro, flat 2, 3, 4, zigzag submicro degree, micro degree, 3, 4, zigzag, 5, 3, 4, combination, 4, 1, 2, 3, 4, 5 into subminuet 5 together 1. From there, well, it just doesn't matter what this is at the moment, does it? Likely another double zigzag structure. We do have a diagonal idea for this as well, which I'll show you in a minute for the alternate count. But what we're looking for here now then is some kind of meaningful retracement. At the moment we're closing in on the 50. Okay, here's the golden ratio back here. Let's look at some local volume profiling for this impulse up, project it forward. Okay, coming back into our point of control here, there is some demand here, as we can see from these previous moves. There's so much overlapping, I'd argue, here between the 50 and the 61.8, probably the 78.6 as well in here if we're going to come lower. We're currently trading in this volume here, this part of the volume profile here, and amongst this demand. So there's so much overlapping mess in this move up that we could find a low really anywhere from now. A touch of the 50 would be nice, a touch of the 61.8 would be nicer. So really what we want to see if we're going to be bullish is we want to see a downward channel break. Okay, so let's just wrap a channel around this for a moment. So we're in the channel, we're moving downwards. So whether this is W, X, and this is now Y, or whether this is A, B, and this is now C, although with a 3-wave move in here it doesn't look like a very convincing impulse, it looks like a corrective move, so I would lean towards the WXY count. And then we're going to look for a break of the downward channel, and we're going to look for 5 out of here. Okay, and then 3 back again, and this is another move up, because this is 1 into 2 of a smaller degree of a 3. So we've gone minute wave 1, bum, 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 minute wave 2. Minuet wave 1, minuet wave 2. Now it can't be minute wave 3, I don't think, because we've already invalidated the top of wave 1. So we're looking at an extension here, going 1, 2, 1, 2 into the 3 of the 3. So if we do bounce out of here, if we find a low, we should rocket out of here, in theory, if this count's correct. Now, like I said, I don't have particularly strong conviction in it because it's just such a mess. Now the lows can often be like this in crypto, and not just crypto. We were having this discussion on the live stream just the other day, and someone was asking me, Tom, is it always such a bitch? And I'm like, not always. It can be, always has the potential to be a bitch, but in my opinion, over the years of trading, I would say that since 2020 and the massive inflows of the stimmy checks, the stimulus money and the retail market, things have definitely gotten choppier. and harder to read. So that's just, I think, and I don't think it's just crypto. I think a lot of your high growth stocks, a lot of the tech sector has like similar tricky price action as well. It could just be me losing my mojo a little bit, but either way, that's the best I can do for the bullish count at the moment. So we'll just throw all this stuff into the bullish low here, check that that's the right folder. Yes it is, save the chart, and that's the best we've got at the moment. So now let's look at an alternate way of looking at it. Let's look at going lower. Okay, and we're going to need that prior count to get the low. So here, now you could argue this could still be, you could use the same impulse here, and you could just go A, B, C, like that, with this mess here in the middle being the same flat pattern. If we can get 5 in here, that's fine. We can make that work. So the 4 would be up here. Right. Oh no, sorry, excuse me. That is the, no, not the wave C. Yes, that's it. We need the alternate count. That this is a B. Sorry, I got a bit of overlapping price data there from an alternate count. Idea is that this was a W in 3 waves. This is ABC flat. This is ABC zigzag with a really funky triangle. This is 5 waves down to get that flat pattern ABC. Completing the X wave, and then from here we can go 3 more waves with a double zigzag into a B. But we could, since we've now, I did this prior to getting that prior solution, we could just look at this as A, B and C. Okay, because we've got 5 big horrible flat pattern and 5 potentially, and that would make it a zigzag. Okay, into the B. Now the best I've got for you from here is that this is shaping up to be a diag. 1, 2, 3, 4 and 5. Now it doesn't quite look like that zigzag is complete, maybe, but it can't be longer than the 3, so it's still going to look like a zigzag. Sorry, not a zigzag, excuse me. It's got to look like a diagonal. So if that's the case, we're going to complete a diag, we're going to retrace quite deeply, and then we're going to flush down in a 3. Okay, and in those circumstances, we're looking for, because if it's going to look like a 3, it will finish in 5. You'll get a 4th wave and a 5th wave, right? 5 waves down. That'll tell us that we're still impulsive, and that will make the next leg of the C, of which will be 5 waves down. So that could be 1, 2, 3, 4, 5. I've got the target around here at 12 grand, but it doesn't have to be that deep. Okay, it's just if we want it to share parity with the prior A here, we would expect the C to come down to around 12 grand. And that's the best I can do for you over the short term in terms of the counts. So we're going to know sooner or later, because we're either going to flush down to new lows, in which case we go back and look at our longer term picture, or we're going to rocket out and start going higher and push for that prior resistance, prior support level, which will now become resistance. Let's just remind ourselves of that for the moment. And let's bring up that local support resistance. So yeah, a lot of work to do, but if we do come rocketing out of here in another 5, and if this continues to get stronger, then the relationship at that point between the wave 1 here and our wave 2 is going to start to look more and more like an impulse. See what I mean? Let me just take an extension tool here for a moment. If we went from the 1 to the 2, put in our wave 3 extension, we're already past the 1. 1618. If this is an extension, we will smash that. We will absolutely wreck it. So I think coming up to the 2618 into all this supply could be the completion of the minute 3. And perhaps at the median line. It's all guesswork, guys. It could be at the top here. Alright, and then you get the 4, maybe that retraces the median. Then you get the 5 to break it, or maybe double top into the supply zone, and then from there you'll be looking for 3 down. So it's got a lot to prove yet, but if we see a larger 1, 2, 3, 4 and 5, then we're going to be looking for that 3 back from resistance to find prior support, which will be able to profile this move up in the 3. Okay, expecting the 4 at minute degree to come into wherever the 4 of the minuet degree was, right? We don't know where that's going to be yet either. Perhaps something like that. I have no idea. I don't know. but we would expect that to happen before completing. We'll be looking for coming back into price support, and then we'll be looking for a reaction, a bounce, continuation, and then that's the entry on the longer time frame. And you take it, I will take it, and if you're wrong, you're wrong. If it reverses and this was all some kind of A being hugely overextended C, tough. You've managed it as best as you possibly can up until that point. Yeah, so that's what I'm looking for. I know for guys who trade on shorter time frames, who tend to be much more day traders, you know, that can not necessarily much help for you, but I'm sure you've got your own methodology. I prefer to pick up the longer term swing trades. I'm not particularly confident in this low at the moment, but if I were to see something like that, I would become much more confident. Okay, so I'm just going to leave it all bundled up here for the moment, and we'll see how we do. I'm sure I've already put this pitchfork on before. I'm just going to lock it into place and see how it's corresponding currently with price. Let's lock this in place, change it into the original basic. So this is our pivot, 1 into 2. We've come to the median line for our 1, that minuet degree. We're now assuming that we're retracing into a 2 minuet degree, edge of the pitchfork perhaps. Right? If it's if the extension continues to grow, and we've got a larger wave degree back here, so 1 2 1 2 1 2, you could come way out of this pitchfork before accelerating back into a 3. So we've still got to wait to see all of this happen yet. So I'm just going to leave it like that. And that's the picture I've got for the primary count that we've bottomed here. It's a bit of a mess, but that's the best I can do. If we come down and break all these levels and make new lows, all of this is nonsense, and we're just looking for a positive move, an impulsive, emotive move off of the new low wherever it comes. That's it. Looking for the same setup again, and waiting and trying to be patient until it arrives to be a buyer. In the meantime, trade support and resistance. Keep a close eye on your indicators, and trading over the shorter term for those who are prone to doing it, I think is the best thing you can do at the moment. Or just leave it alone completely. If you're a swing trader and you want to wait for a better setup, go do something else with your life. Alright then guys, that is all I've really got for you on Bitcoin today. I don't think I can really talk any more about anything. We are still in a could be corrected, could be impulsive setup, and we're just waiting. We're waiting to see something more convincing on the longer term, and when we get it, we get it. So if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. As always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron, there's a link in the description box below. Head over, have a read of the tiers, feel free to sign up. I would suggest waiting till the start of the month now, so you get a full month's value. And if you're not following me on Twitter, please do so, but I do only use it to announce the upload of YouTube videos. So, take care of yourselves guys, and I'll be back with you as soon as I can. All the best, enjoy the start of the summer holiday, take care.